Why don't we start with Amazon? What did you think about what you saw? And I thought it was pretty interesting. Cloud actually missed estimates, but still we're seeing the stock move higher.
Yeah, that's right. Amazon did have a couple of blemishes, and after yesterday, you might have thought that anything was going to get punished, but not Amazon today. And I think a lot of that had to do with the profitability of the company, which was the big surprise in the quarter, is that just a huge amount of profitability on the bottom line. And I think that that gives investors a lot of comfort. And the sales numbers were decent. They were very close. So no surprise that that stock is up. It also hasn't been one of the biggest performers of the Mag 7 or of the technology area. So some room to go for them.
You know, we're really seeing an impress investors. I want to get your take on it. They increased CapEx by 81%. At the same time, we saw margin expansion. That's pretty tough to do at the same time.
It really is, and the CapEx number was very important. And now that we're through the big CapEx spenders, the cloud spenders, you can see that they are all still focusing on CapEx and spending huge amounts of money. And the comments that Jassy made about the possibilities for AI and generative AI and their focus on that continues to mean that that story continues to run. That should be good, a good read through for Nvidia, which will be the last of the Mag 7 to report.
Okay. Let's talk about Apple very quickly. Those shares down just over 1% right now. It really seems to be the guidance because there was a lot of other things in this report to like. Gene Munster from Deepwater, one of the people crunching the numbers. According to his numbers, the guidance was about 4 to 6% revenue growth in the current quarter. The street was looking for almost 7%. Is that make sense to you that the stock's down 1% just off that, considering all the other great things, including, you know, the iPhone commentary from Cook and also the numbers 6% increase?
Yeah, I think that, you know, Apple has had a nice run this year in anticipation of the iPhone 16 and AI and the rollout, and both of those were really a bit on the disappointing side as far as what you can actually do with the phone and the functionality. You know, the fact that the sales were okay was pretty good. I think that was, for at least from my perspective, that was better than feared. And again, that stock has not really performed that well in the last couple of weeks. So the fact that it's only down 1% is good, and the fact that it's down is fairly mild, given that, you know, there's still a lot to come on the iPhone 16.
You know, the decline might be kind of mild, and I agree with you on that, but just considering its weighting in the market, it's a really big deal. I do also want to talk to you about Apple's forward PE, 31 times. We talked a lot on this show about investors getting religion when it comes to valuation. What we're seeing from Apple, this 1% decline, which I know isn't a big number move-wise on a percentage basis, but considering its weight, again, huge. Is this a sign that maybe investors are paying more attention to forward PE, valuation, and kind of the sense that this market's priced to perfection? Is this a read on what we're going to see for the rest of not only, you know, earnings season, but just the rest of the year when it comes to the market?
Yeah, that's what we saw really yesterday, and that's kind of what you see when the market reaches up and starts bumping along its all-time highs, and the PE multiple gets into the mid-20s, is that you really are, like you said, priced to perfection, and when you get misses, even if they're slight, the market tends to just make a reaction there, and that's what we got yesterday, it seems, is that, you know, none of the news was really terrible across the board, but it was a little bit less than what people were expecting. And so when you have a market that is based on strong growth and strong earnings growth, and you don't get as much of that, you know, people start repositioning.